Gold fever, yeah. All right, I'm going to put the link. This is Gold Ventures blog site, the Gold Fever portfolio, just to show you how it is. You could see all the details here, so much details. But I'm going to do just chart reviews, chart analysis. And I got all these names. I put them in my TradingView. And we're going to go through them right now, guys, before gold explodes for the next leg up. All right, so let's start with Eskay Mining Corp, monthly chart. So let's look where we're at. Look, it's already starting to set some records distance away from its 1 year moving average. This is pretty powerful stuff. The consolidation, you see, it never got closer than 98% from the 1 year moving average. And bam, just rocketed above. So it's starting to set its high watermarks. So we're going to see after when this consolidates, when the distance from the 1 year moving average starts slowing down, like it did for all these years previously. This is going to be our high watermark target for the next leg up. Let's do trend line. So it's in the bull power zone going back up. And the transition, usually it's strong move. So we like it to stay up here, but if you could catch it on the what I call the bullish transition zone, the move from the lower bear zone transition to the bull power zone, you'll see a strong up move in the price action. And good things do happen above a 1 year and 3 year inclining moving averages, especially when they come from below. You'll see a lot of stocks are like that. Like you think it's the end of the world here, but it's climbing up. Valid trend line on closes. And there it goes. Confirmed breakout in June of 2020. And that was optimal buying area right there. Where's my box? And you have a nice, huge volume defined base right there. So off it goes. I don't know. This one's a pretty stretch. So if you're a holder, you keep holding it. And eventually we'll get an opportunity to buy when it gets closer down here, guys. Eskay. Let's do a target. Let's see if I could put targets on all of these. So we'll get greedy. The log measured move. Horizontal breakout line. It's probably already did it. Maybe not. Oh, yes, it did. Wow. So it's already reached everything. It's reached its targets. It's reached 500%. Yeah. It's already overshot. So you see these bases when they explode, they could move so fast. And the bigger the base and the explosion, the water balloon there below, you're trying to hold it down when it explodes. Look at this on the log scale. Look how the angle of ascent is insane. So a lot of these other miners are going to have. This is a type of move that could happen. This type of explosion. So I don't even have a measured move for this one. It's already attained it. We have to wait for the chart to morph to pull back and see what type of pattern we get. Are we going to have a pull flag, pull type move going upwards? All that stuff there we're going to have to keep an eye on. But as long as you're above the 1 year moving average, it's good. You hold. Okay, beautiful. Here I have my favorites. Confirmed horizontal breakout line right here in December of 2020. Exploded, consolidated, huge volume defined base. You're going to start seeing what I see. Inclining 1 year, 3 year moving average, bullish cross. This could be another Eskay in the making, man. But this one's a little, you have a chance to catch it a little earlier. I don't want to go down here to the micro penny, so I know it's maybe not proper, but I take the base, the chunk of where the price action was, and I will use a log chart because these micro stocks or these they move logarithmically, especially at the beginning. They have and you see 850. So this is pretty much a target, $3, $3.30, and bring us back to these highs right here. Look at this distance from one year moving average. So this is what I mean about the high watermarks. Proven moves that it's able to distance itself away, the stretch, the fear of missing out, where people say, oh, I might take profits. We set one here. It's starting to reset, approaching a buy entry. Corrections or consolidations, remember, it's the price action. It could go sideways and the moving average catching up. It could, or price action going down faster, catching up to 1 year moving average. Still in the bull zone. So maybe you want to wait a little bit for this to turn back around. Let the 1 year moving average catch up, and then we'll get probably a good low risk reward entry right here. But until then, anybody that's in that bought on the breakout, this is the target, and people who want to buy on the pullbacks, then you could wait a little bit until maybe if this pulls back or it goes sideways a little bit, then you could get on. Montero. Ooh, Minnova. So you see, look at that. Go back Montero. The price action started moving even as the 1 year moving average was below the 3 year, but catching up. So this is one to really keep an eye on. Here is my line in the sand. Horizontal breakout line. Oh, this one's about to go. 1, 2, 3. Oh, this one's really, it's above, still a declining 3 year moving average, but above an inclining 1 year moving average. Consolidation here. Is that another pull flag? Pull. Oh, over here. So this could have, it's already maybe completed and have the energy to blow up here. And what I like about this one is you see the target of that pull flag is around these highs right here. So this is already a target close to $2, 173. And after that, you'll have a bullish transition zone above this neckline, and then the price action will be above this huge base, and then you'll be able to see higher patterns. And look at that, the distance from, let me put, where is my, see, that's a high watermark. You know that the stock was able to distance itself that much away from the 1 year moving average. So relatively speaking, you see this is a low risk entry. So for Minnova, tight, close to the 1 year moving average, just bounce back off that inclining 1 year, still heading. So this is a lot of fuel for explosion. So I'm expecting Minnova is a great low risk entry versus the first two we have at this stage, and probably reproduce the moves that we saw in the other ones. So that's the first target. I wonder what the bigger target is. Probably the same thing. So eventually, once we close above 79 cents, 80 cents. Whoa, greedy. Massive. Maybe too greedy. One step at a time. Let's reach this zone here. Maybe actually something maybe a little bit different. Remove that noise from the bottom. Maybe this will be the bigger pattern. So here I'm going to probably have some this type of move here, and then I have a bigger base. Jesus, okay. It's too far in the future, guys. Too far in the future. Greedy. Well, the bigger the base, the higher in space. But I'd first focus on reaching that those previous highs for MCI. Minnova. KTO. Whoa. This one's looking sweet. Check it out. So right here, let's do it this way. Descending trend line, big change in trend right here. When you break above a horizontal breakout line, you break above a descending trend line. So June 20, it's a big move out. Exploded out, consolidating now about just below the 1 year moving average. The month hasn't closed yet, so this is probably a very low risk entry. 3 year moving average starting to catch up. And here's the volume. So we had a huge volume defined base here. Here you create a lot of volume. And this could actually be, Here's my huge volume defined base. So right here, previous highs, monthly defined highs. I'm expecting this to stop or not go much deep below that, close back above. So for me, this is a low risk entry. And you see it right here. Here's a high watermark distance. So low risk entry here, maybe dip a little more. And after that, when it stretches, it could stretch all the way 140% away from the 1 year moving average. And then you could start thinking about taking profits wherever, how far it is. The stock. So maybe this pivot line, previous resistance, turned support. So you even see, I think the stock's starting to turn a little bit. No, not yet. But maybe we could expect it to turn back up here and go back upwards. So this is actually a lower risk entry than the other ones. And is this another flag pull? The best time to do reviews is on consolidations. I love the symmetry. So this measured move would bring us in third quarter of this year. And that's also some of my other charts. I'm expecting silver to do really good in Q2, gold in Q3, and silver in Q4. And this would bring the price action back into this congestion area up here. So in between, sometimes it overshoots. So about a 250 target for K2 gold, guys. Orezone. I did lines on this one. It's looking good. Stop saying that, Pat. Stop. They can't be all good. Look at that. Okay, I'll put a horizontal breakout line right here. Previous wall, previous support turn resistance. Oh, can't go above, can't go above, can't go above. Consolidating nicely. Look at that. Higher lows, inclining 1 year moving average. Yeah, you see it. I see it. Pull, flag, pull, and it's maybe already on its way back up. And this is going to be beautiful, beautiful move. So Orezone. This move should bring it above its congestion area. Flat. Look at that. No volume defined resistance. Barely any. So this congestion area, if it went down fast, not a lot of transactions. So not a lot of people that are bag holders are going to sell here. Everybody transacted. They change hands over here. Man, these are sweet setups, guys. Everybody is focused on silver while gold was consolidating, and it's creating these awesome opportunities. Look at that. Here's your high water marks. So for if you want to know when to take profits, don't even think about taking profits until you're at least 60-70% away from the 1 year moving average. Look, see it's turning back. So this one is a plus setup. Already turning back on that pivot line. Beautiful. Orezone Gold, guys. This is a beast. And the targets, yeah, 220, 225, overshoot maybe. It's a low risk proposition right here. High reward. Fiore. All right, what do we do with this beast? Volume defined base right here. Broke out, consolidating close to 1 year moving average. Creating a volume defined node right there. I'm scared. So you see, it's not as Orezone. Is that how it's called? The previous one? Orezone is primed. It's already turning around. So from a cost opportunity there, time opportunity, it's already turning. So this one I'm expecting pretty much the same thing to start turning on this pivot line going back into the bull zone. So it could drop a little bit or move a little bit sideways before turning around. And look at that. What's the measure move, guys? Let's get greedy. Let's get. So it already has a confirmed breakout. So this move. 240. Yeah, about $3. And the pull flag pull depends where it ends, where it decides to turn around. But again, see all these targets? They're bringing us in the Q3 of 2021. And $3, guys. $4 for Fiore Gold, guys. It's at 92 cents. 4-bagger. Lion. I always think of Lionheart, Jean-Claude Van Damme's movie. When I see that word lion, big fan. I grew up on Bloodsport. I remember a friend there. I was in elementary school. A friend gave me a VHS cassette of Bloodsport. I don't know how old I was, 11, 12. And she said, "Oh, gotta watch that, man." And then that's when I said, "Wow, that was awesome." I've been a fan ever since. Huge base, higher lows, just beautiful. Broke out. Look at that insane breakout in 2019. Look at the noise. Oh no, it's the end of the world in March. Closed above that 1-year moving average. But line 1 right now is really, really consolidating, really waiting maybe to catch up to that 3-year moving average. It's right below right now. A lot of fear. So it just needs a little bit more time. Here are the high wire marks. Don't even think about selling. See, even starting at this area here, all the way here, this is probably some profit taking zone right here. And right now, you're not even close to being 74% away. Oh, this is interesting. The stock giving you some clues that the price action is really, really starting to slow down. Let's see if this holds. And that's how I see it. Probably a turnaround around this area. Is there more support? Yeah, another stock area. So this is a confluence of support right here. Falling wedge to bring the Lion one up, back up. And it's already proved. This is a strong pullback, guys. Let's see. Okay, I'm not gonna. Okay, let's do the non-greedy target. 145%. Oh, it did. See? This big base, this reached it. Now it's pulling back. So let's see what kind of a... This one's tricky because it's already done its move, guys. 340. This would be the next bigger base, bigger pattern. 340. Okay, so this would probably be my next target, my next move right here. As soon as it starts turning around, if it could close back above the 1-year moving average, this is my target, about 450 for Lion 1 metals. NFLD exploits discovery. Not a lot of data. Not a lot of data. Weekly chart. Yikes. Not enough data. Daily chart. Wow, even on the daily chart, I don't have a lot. So there's not much to see here, guys. It's below is that the 50-day moving average? It's below a 50-day moving average. I would actually wait here. Huge volume to find base. Unless you want to catch that one. It is showing some type of... the stock is transitioning into the bull zone on the daily chart. Catching up to it's still declining 50-day moving average. But until it closes above 77, it's hard to tell. Unless you want to try to catch that at 42. So let that base form. And once that forms... Because you don't know how much time it's going to need. Then after that, we could start imagining... upwards target. Sorry, I can't help you there. I need data. Oh man, not a lot of data. It's kind of messy here. Goliath Gold starting to turn around. Remember when you get out of the stock, the strong moves. But you see how far away they are, the 1-year and 3-year moving average. You want, because at any moment, because you're below that declining, still 3-year moving average, it could still be a rough time. It could still, at any moment, that higher trend, even if they have the 1-year below, bring you up. That 3-year could still push you down. So it's not as primed as the top ones that are already proven that they're above, or the other ones that are really, really close to having that bullish cross of the 1 year and 3 year. So that's another one that you probably want to let it prove. See, nice volume defined base. Look, on the shorter time frames, I'm pretty sure it looks a lot better. It's distancing from the 1 year moving average. But let's look at Goliath on the weekly chart, 10 week, 30 week. Yeah, this is a on the 30 week Stan Weinstein style. This looks pretty sweet. And look, the stock even looking to go back into the bull zone. Classic Stan, breakout above horizontal breakout line, inclining 10, 30 week, huge volume defined base, just bounce off the 30 week moving average, and it looks like it wants to continue up, guys. So this is actually, so on that intermediate time frame, which can eventually, if this continues as it should, you'll see the effects of that bullish price action from the weekly spill over to the monthly, and then the monthly eventually is going to catch the eyes of guys like me on the longer trend. Why am I doing something like that? It's already moving up, guys. So yeah, you see that pull, flag pull is going to bring you in this month, this quarter, March 29th, bring you back here about 150. So what about, how is that going to look on the monthly? And you see, so this is the move that's going to bring you back here, back above the 3 year. And after that, we could look at even bigger moves. Not that bad for swing traders who want to catch it low. Baru, man. Baru. This one's got a lot of buzz. Long-term stock. No. And not dipping lower, trying to go back into the bull zone. So look, another bullish transition type area I love. It tried to explode here, got a lot of people, to the moon. Wasn't quite ready, pulled back. And now a lot of people are out. They switch hands over all these months. But it looks like it's completing its bull flag, pull flag? Bull pull flag? Jeez, I gotta stop, guys. It's worse than Kirklake land. And this next move should bring us to about 52 cents and even overshoot with the wicks on the smaller time frames and even the summer, guys. So this is going to bring in us in June, even before here, right? Because the price action could be above. So in Q2, I'll have high aspirations for Baru to complete this huge base. And look, it's proven that it was able to really stretch from its 1 year moving average, and now nobody wants it. Nobody's talking, super close to its 1 year moving average. Bullish cross. Great things happen when you're above an inclining 1 year 3 moving average. I'm just repeating myself all the time. And this will be the move. So after this move that we're going to try to play out now, this is the one that's going to get your greed up. Baru. Oh, I'm rich, Mom. I'm a millionaire. I made it. And bring us all the way up here to about $8, $8.50. So right now, sitting at 16 cents, 17 cents, 50 for the next move. And after that, once we're out, 1400 to the moon. Ophir Gold, bullish cross. 3 years still declining, but the price action now is above both of those moving averages, consolidating back close to that 3 year moving average. But the longer you stay above, the more that it's going to start flattening that 3 year moving average, and eventually it's going to start angling upwards. This is the fear of missing out. If you want to know if you're fear of missing out, again, distance from that 1 year moving average is going to tell you everything you need to know about your greed. Oh, it's going to go higher. Look how stretched you are. And then look, the bullish transition zone made a lot of price action go up. So let's see if this thing could bounce off, come back here. But it's not that bad, guys. Volume defined node. Let's look for clues on the weekly. 10 week, 30-week. Now it has to bounce right here on the 30-week moving average. I don't think you want it to close there. Very close to the 30-week moving average. Oh, the stock's starting to slow down. So this one is not prime ready. You want it to let it prove to you that it's able to turn around. And once it starts turning around, once the weekly shows signs that it's turning around, then guys who are less afraid of the monthly chart, they could grab a position here. And then after that, when the price action goes back above 30 cents, back around here, that's going to garner a lot of attention. Here is my monthly candle defined breakout line at 37 cents. So bounce here, complete that formation, and then after that, there's not a lot of data, guys. I don't know if these penny stocks. Can there be penny stocks in Goldfever portfolio? They are juniors. So about here. So this is the targets later on, $4, $4.50. But right now, I want to see it turn around on the weekly chart and then show that price action on the monthly chart. Angold, not a lot of data. Can't do anything here. Below 3-year, inclining 1 year. I have to go with daily, I think. 10-week, 30-week, very bullish right here above these moving averages, trying to create volume defined base. So a lot of volume here. Just trying to create some importance. And this could be the beginning of something. But it's really tough to need more price action. Wow, how's this thing traded? Distance from 50-day moving average. Not much here, guys. It's tough for me, this one. So I would really like to see this thing wait, see how the price action turns, more candles. But right now, this thing is a mess. Mess. I can't do anything with mess. First Mining. I've checked this one before. I like it. All right. Above 3-year, 1-year moving average. See how it busted up? Because the 3-year moving average is still declining. It brought the price action back down with it. But now hitting the 1-year moving average, the 3-year moving average is going to start turning upwards. Uber low risk entry right here. Super entry. A few months back and you're still pretty close to it. Look how far you could stretch from that 1-year moving average before worrying anytime soon. A lot of fear here. Nobody likes gold. Gold's going down the drain. The stock already starting to turn up. So that's fuel to go back, to stay back in the bull zone. This one is pretty sweet, guys. This one could explode at any moment. And I don't mean the next day. Like, this is on a monthly chart, so any moment could be any monthly candle close. Even above this neckline right here. And here's a measure move. It's going to bring us back to at least $1. And we've seen these patterns over and over in the other charts. We're going to start hitting some resistance up there. So that's my target for 115 is my first target for First Mining. Right now sitting at 44 cents. GGM. I have been following this one. Look at the huge volume defined base. Right below it. You see that declining 3-year moving average still bring it down, but I'm going to take that out just to show the details. Cool. See those wicks? Every month, it's below, close action below the 1 year. So the 1-year moving average is doing its thing. It's keeping the price afloat until the market's ready, until the capital flows start going in here. But some people saying, look, the price is too low. I'm not going lower. And the longer you stay above that 3-year moving average, you're going to start eventually slowing down its descent. You already had the paradigm shift. Already had the transition zone into the bull zone right there. Look at that. Look at that. Oh, and And even here, I think I could do another line. Oh, longer term. Look at this thing. 1, 2. So could I get not greedy? Could I say this is the pattern? We're consolidating right below this important neckline. Wow, if this thing breaks out, man, this is going to be a 11-year downtrend that is going to break out of. So it's right now in the bullish transition zone above those moving averages. And let's keep an eye on that, man. What could be a move? So let's say this pattern completes. Above this base, 170%. And you see, like magic, it's going to bring us pretty much to a congestion area around the 73 cents. So the next targets for Granada Gold, 73 to 98 cents. This zone here to create a huge base right there with an insane measured move that's going to bring us really high, probably up to these all-time highs. But first, you want to finish that consolidation. You want to break out of this bullish transition zone above those moving averages. And once you're out, we're going to try to complete this huge, humongous base, which is going to bring us probably up to $6. Condor, almost there, guys. 30 minutes. I talk too much. Condor. I hope this is the right one. I wasn't sure. Somebody on the Twitter said, hey, Pat, there's a lot of condors. Look at that. Beautiful paradigm shift, break line. Sometimes you consolidate right out bullish transition. Sometimes the water balloon has been pushed too long under the water and it just pops out higher than expected, and then you consolidate much higher instead of consolidating below important neckline. The market says, whoa, you've been held too long, too much under, you're going to consolidate above. And so anybody that bought on the bullish transition zone right here this month in May of 2020, right above that inclining 1-year moving average, 3-year moving average, still declining, but you're above it. That's a beautiful entry. And look at this huge volume defined base right there. Beautiful pattern. Bull flag, pull flag. I'm calling it bull flag. Pull flag. Angles. Look at that. Bouncing off the 3-year moving average. 1-year moving average. Man, this thing's a beast. This is my targets. All-time high, baby. 150. Maybe more. And fast. So this is Q3 of this year, Q4. Like I thought, gold's going to be doing great during in Q3 of this year. So this thing is going to be a beast going up. So pretty much a low risk entry right here. Close out 1-year moving average, and the rewards are all the way up here. This thing's sitting at 26 cents, guys. 26 cents. Target 150. It's going to be epic. Ah, man. Not a lot of data. It's unfortunate. These could be the next Kirkland Lake Gold, but I can't do anything with this. I'm sorry, GV. I don't know where this is a mess. ODV. Ay. Okay, no. Pass. Hard pass. All right, Goldfields. Let's go on the 3-year moving average. What is this thing? A lot of data. Wow. What? Since 77? That is a long-term chart. Huge volume defined base. So this thing broke out. Oh, this thing is messy. Broke out here in December of 2019, broke out, but then the March Madness made it go back below that breakout line, refused to close below that 3-year moving average, and closed only 1 month below that 1-year moving average, and then it went up, exploded, hit that congestion area, now pulling back towards that 1-year moving average, and it's pretty sure that that thing hit its target. So this is a major. This is part of the major section of the the Goldfever portfolio. 150. 150 would have brought it to the neckline. 156. So it didn't quite make it. Pull, flag, pull. Will those targets reach? Those targets were reached though. See how they reach it sometimes way ahead of time. Now it's pulling back. So I would definitely let this one consolidate. There's volume defined node right here. Let it catch up to that 3-year moving average. There's a huge volume defined base right here. And I think here you got to look big. Look at that, how far you could stretch from that 1-year moving average. A lot of room. That's a lot of fuel. Oh, the stock's starting to turn around. Oh, look, magic. Resistance, resistance, support, support. And hopefully this could probably be the turning around for a gold field right here close to that 1-year moving average. Let's wait at the end of the month. If it has a nice white candle that closes above, this could be a great low risk buying opportunity. There's still some volume defined resistance there, but I think the bigger picture, you have to look at this insanity. Look at that huge pattern. So this is, if we could consolidate right below this area here around the $15 mark. Right now it's sitting at 9. After that we have huge measured moves to the upside. Equinox. Hey, I know you. Kind of looks like Goldfield, consolidating below the 1-year moving average. Gold has stretched its technicals, even the gold chart. So all these miners, eventually they're trying to sag below their 1-year moving averages. This thing has a lot of strength. It's shown that's able to really stretch from its 1-year moving average, 52% away. The stock's starting to slow down. I've seen this in the GDX. That I saw the stock starting to slow down. So even if for 5-6 months there the GDX has been going down, red candles, it's going down less and less. So giving some signs that maybe the market has starting to reach a bottom. So here is maybe a wall. So previous resistance turn support, we broke out. So Equinox broke out in April of 2020. Broke out, really getting close to testing it. Man, if you could close a month even back above the 1-year moving average, this thing's looking pretty nice. I think this even warrants a pull, flag pull. And the targets would bring it above its 2014 highs. Somewhere in Q4 maybe of this year, early next year. So this one is a beast, and the confluence of support right here, 3-year moving average catching up. Hopefully it doesn't go below $11. It could stick around there. Almost there, guys. 3 more. We could do it. We could do it, Pat. Kinross. Hey, it looks like Equinox, right? So these majors are really following the script to a T. Higher lows, beautiful, inclining 3-year, powerful trend, inclining 1-year, powerful trend, huge volume defined base right there. Nowhere close being overbought. So if you're getting in now, you're not getting into any fear of missing out, guaranteed. This is how far you could stretch. The stock's starting to show signs of slowing down. And these like rinse and repeats. So this thing is on really close. You really want this to turn around. Turn around, stock. You're below the 1-year moving average. Not super duper, but it's shown that it could dip a little bit below in those extended areas. Huge volume defined base. You're not at the end of a run of let's say that 2011 run. Where is it? See, you're just starting the corner right here. You're not all the way up here yet. Especially with the cycle analysis that we've done with the metal, that gold is going to start slowing down, or it's going to have a low in November, let's say, of 2024 or somewhere there. You got to see these as consolidations, corrections, even want to test maybe that breakout line. The precious metals bull run is nowhere close to being ended. You see, oh, why did I slow down here? Well, important support turn resistance. Refuse, you break down. So now there are a lot of buyers that bought above here. As soon as they come to get break even, they want to sell. So hopefully that first test is gonna have to absorb a lot of those guys that didn't sell here or that didn't sell here. And the next time it tries to go back above, that it won't have that overhead resistance. But what's my measured move here? Did it reach the non-greedy measured move? 110%. Did not reach it. And sometimes you have these measured moves. So let's say I would have done the measured move before all this started. This is the type of thing you could expect. So you could adjust your measured move. Say, look, I understand that the measured move's all the way up here, but it's possible that the wall will slow me down, that I'll get rejected. So this would have been a nice target. But this also is, that's why you have to zoom out. You have to look at monthly charts, because this is like invisible resistance on smaller time frames. You'll never see this if you don't have the 2000, like a chart where it brings out to 2005 or 6. All this, you won't see it. And then you'll say, hey, my target's easy. I could reach it. Look, there's nothing here. But when you zoom out a little bit, then you see that there's a congestion area. So right now, correcting, and the next target is 15. Kinross. AU, guys. AU. Ooh. Wow, look at that. Whoa, what is that company? Jesus. Wow. And that one's been going up and up. And right now, let's see what we're dealing with. What'd I do? Patrick. Always look to see where my important historical breakout line is going to be. And you see, oh, the wick, no, refuse, went back down. So we did start having paradigm shift, change in trend right here back in June of 2019, broke out above 1 year, 3 year moving average, consolidated very violently. So you see it dips below that 1 year moving average, but always stays above the 3 year moving average. So right now it's still in a bullish transition, trying to go upwards, and it's getting closer and closer to testing this critical breakout line. And that's going to give me a mega measured move of see right here, look at huge consolidation below that breakout line, broke out, came, retested it. So this is actually a low risk entry right now. Stock trying to tweeze up. Hopefully when it goes back up, that's a lot of energy accumulated. Nowhere close, buying in FOMO. Okay, let's do a measure move. Oh boy. So let's say $400%. Jesus, I'm a millionaire. That is huge. Can it maintain that? Is that a long-term measured move? Wow. Kablooey. Maybe we could do another way. So let's say the breakout was here. Let's go with this smaller pattern, not get too greedy, and expect that we'll hit resistance when, well, we already hit the resistance on that wall. $83, maybe more reasonable, right? So this move here, measure move all the way up here, about to $84, $85, and resistance right here. So bullish transition zone, the steepness of the angles of the trend, less and less. So the less steep, when the horizontal breakout line is really like the last one. Once you break out of it, it's everybody gets on board. That's when it gets the attention of everybody out there. Iamgold. Okay, so this one has been there for a while. Let's see what we're dealing with. Last one, guys. 44 minutes. I could do it. Less than an hour. Probable. Impossible. Something like that, maybe. So maybe something like that. Pivot line around this area here. Previous support. Turn resistance, support. Oh, broke. No, I'm resistance now. Resistance, resistance. Came close. Resistance. Oh, so this one's the less pretty of the gang because it's below declining 1 year 3-year moving average, below the 1 year moving average, below volume defined base. So this one is not pretty. Not pretty. See, you want it to be in this zone right here, above those moving averages, at least to give you a chance. But now you need many months just to bring the price action back above the 1 year moving average. So this Iamgold is a little bit suffering right now. So from a time cost opportunity, you're better off putting your assets in either in the juniors or even the Equinox or Kinross there. You could zoom back. You'll see there which are the ones that are on the verge of breaking out again. But for Iamgold, it's going to be a little tougher. A lot of hurdles. We could zoom in on the weekly. See if we get some clues. And it's still below 30-week, 10-week moving average. Huge volume defined congestion area right here. A lot of people are going to want to take profits. Or not profits, they want to break even as a price. They bought here, price went down. Price action goes up. No, I want even. Oh, I'm even. I'm out. And then you could break out. So we have to let the price action get above at least this volume defined node on the weekly. Once we're above that $5 area, then we could keep start getting interested for entry. Oh my God! Whoa! So that's it. Goldfever's out. It's fun to look at. I haven't looked at these stocks, but you know where now all this is sitting. So in the juniors, there's some ones that are very strong that you wait for pullbacks. Some that are really ready right now to get in before gold makes its move. And in the majors, there's a few of them that are going to be primed for the next move up, guys. That's it, guys. All right, signing off. Don't forget, Silver Chartist report. I keep promoting it, but Kevin, North Star, Jeff Clark, Steve, Penny, Silver Chartist, and my contributions weekly. So there's some exclusive charts that I put in there that you won't see anywhere else. Sign up description and those cards there I put in the YouTube video. All right, guys. Appreciate it. Ciao.